Hi guys, Lee Gettess here with the Market Sense for the week of March 6th, 2018. The charts in this presentation are provided to us by Trade Navigator software. That's from Genesis in Colorado. And our first chart here is looking at the bond market. These are the Treasury bond futures, the long-term futures. They had a little rebound last week, just a little bit. After all this dump, it kind of looked like they might be time for a little move up. And so far this week, they've just remained inside of last week. And considering last week closed right in the middle, that's not terribly surprising. We're kind of looking at, I don't know, 142 down here up to 144, 03, someplace in this area. Between the two moving averages is the likely range for the week. Now, the one exception to that is there is a level right here, the middle moving average, which is around 143.08. They've been a little bit below that, but not by a ton. If they can hold this and get driving, they might take out last week's high and do some serious rallying here, at least up to the mid-Keltner channel. And, I'm at some point, this whole sideways pattern all through the middle of the chart here, those lows, they'll probably go back and test those at some point. I'm not sure how soon. But this could be the springboard to a move like that. So, we'll keep an eye on them and see what happens. Very tough to fight the Fed when the Fed's raising interest rates, but, bond market's always had a mind of its own. In stocks, we're looking at the weekly chart of the S&P E-mini here. And last week, I kind of thought they might have a quiet week. They didn't, but it had the same impact. Here's what I mean. You go back a few weeks, this week was inside to the previous week, and then this week was inside to that week. I thought they might shrink again. Instead, they had an outside week that closed back within the range of the previous week. Now, basically, all of these mean the same thing. They're all some form of consolidation, trying to figure out what to do, and probably going to lead to a breakout eventually. Although we'd really like to see the ranges shrink. I mean, you can see the weekly ranges are much larger than most everything else you can see for the last year. So we'd kind of like to see the ranges shrink down before we get a serious breakout. For this week, I think we're looking at roughly 2650 to 2765 is likely containing them. If they should go above 2790, let's say, or down below 2625, they could have some follow through. We could get some serious movement either up or down if they break out that far. I wouldn't necessarily predict that though. Again, you'd like to see the weekly ranges shrink before you get a serious breakout like that. Now, I'm a technical guy, but from a fundamental standpoint, I'm hearing rumors that Gary Cohn, President Trump's leading economic advisor, is looking to get out. That's not good for the markets. So have to be on guard for that. So that's what we've got for you today. I hope you can find something profitable to get yourself involved